Hey, I'm Scott Hansen. Got a special podcast for our podcast listeners. I interviewed our chief investment officer, Andy Stout, this week, just talking about what transpired with the markets, what's going on. So hope you enjoy it. Give it a listen.
Hi, Scott Hansen here, co-founder of Allworth Financial. It's been a rocky week for the markets, to say the least. Thought it'd be good to spend a little time with our Chief Investment Officer, Andy Stout. He's going to be joining us for a conversation. I've been a financial advisor for over 3 decades, worked with hundreds of clients over the years. I know how challenging it is in times like this when markets are going through choppy times. It's just no fun. It's no fun seeing declines in our portfolio. No one invests for those declines. We invest for gains. And so when we have times like this, it's challenging. So we thought we'd put some perspective onto things. Talk a little about what's transpiring, what's happened as of late. Briefly touch upon some of the things that Allworth has been doing, and then also just maybe some things that you ought to be considering during a time like this. So Andy, thanks for taking a little time out of your day to join us.
Absolutely. Thanks for having me, Scott.
Yeah. So maybe you can just kind of talk about what's driving the market south right now.
Yeah, I mean, I know you see it, Scott. I mean, we talk all the time about this. Just there's a lot of headline noise out there. I mean, you can look at the markets one day and you see these headlines and it might look like there's some sort of issue and then it appears to be resolved. And then 10 minutes later or the next day, there's a complete 180. And it's what's happening. It's creating a lot of uncertainty out there, and markets don't like uncertainty. So even when you see things about, oh, tariffs are being delayed for a month, it's not always necessarily a good thing. I mean, it might be good from the fact that there's no tariffs for a month, but it still keeps that uncertainty out there. The markets like certainty.
You're spot on there, Andy. It's that it's the kind of the fear of the unknown, and so. And I think a lot of people thought with the Trump administration that tariffs the most beautiful word in the English language or whatever hyperbole was there. I think a lot of people thought it was a bit of smoke and mirrors and saber rattling. And now that we're starting to see it go into effect, now people are saying, well, what's this going to have? What impacts is going to have on prices of goods? What's this going to impacts are going to have on the amount of exports and imports we're going to have and that sort of thing. So I think there's some valid concern right now on the uncertainty that we face.
Oh, absolutely. I mean, just walk down any supermarket aisle, and I know eggs are impacted by other things besides just what's going on here, but people just see inflation. They see a carton of eggs for $8, and they think to themselves, okay, well, on top of this, we have all this other stuff going on, and it gets them really worried, and it's understandable. I mean, I get why some people are concerned and why they are worried about what that might mean for their own financial future. I mean, to be quite honest with you, that's a very, very normal reaction when you have this sort of volatility.
Yeah, and it's of course it's and a lot's going on with the new administration, right? I mean, firing on all cylinders right now. And
well, speaking of firing, right? You have the Doge looking to do job cuts out there, like across the board on the federal government side.
Well, it's all that, and I think if we just look today, the jobs report came out. A little hiring is slightly less than expected. Unemployment ticked up slightly. I guess this is good news on the inflation front. And what's the market thinking right now with the Federal Reserve in the next several months?
Yeah, that's a great question. When you think about the uncertainty that's out there, the Federal Reserve has certainly been something that has been uncertain, not necessarily people not knowing what they're doing or not thinking the Fed knows what they're doing, but more along the lines of what the market pricing in keeps changing based on the uncertainty surrounding the economy. So when you look at the Federal Reserve in general, I mean, they have a meeting coming up here in a couple of weeks. There's virtually no chance of any sort of move in rates right now. So they're not going to cut rates just because inflation still remains elevated, and that still remains a concern that is out there. So what the Federal Reserve is going to do, they're not going to do anything at our next meeting. They might do something in June. That's kind of the next time where you start to see the market starting to expect a move. So that is on the table right now.
Yeah. And so, things can turn rapidly the other direction, right? And I think it's funny is we tend to have a kind of a short-term bias of whatever's happening now. We kind of feel like it's going to continue happening. Just emotionally, it feels that way, right? Like emotionally, it feels like it's going to take us a while to get out of this malaise. And I think back to some other times. It was just a couple of years ago. 2022 was not a very good year for investors. We finished the year with negative numbers. And then if you go back to the 2020 when COVID, the lockdown started happening. And the markets went into a spiral, and very frightening times. And for those that reacted during those times, a lot of them never quite recovered, right? Because you get out when things are sliding, and when you get back in, it's like it's not going to look good until things are at new highs again.
Right. It's really easy for your emotions to take over. And, I said just a, minute ago that, I understand why people are nervous, but that's also why you need to understand just from an educational perspective, how markets work. You might think, this time is different. It feels different this time. And it does feel different because of the headlines that are out there. And it's very polarizing, often depending on whatever side of the aisle you're on. But when you think about it from an investment perspective, this is really just part of a normal market cycle. It might feel unique because the triggers are different, and those triggers change over time, whether it's inflation, whether it's tariffs, whether it's a tech bubble like NASDAQ, or real estate with a great recession. When you think about just historical patterns, you have different triggers, but the market and the economy still follows those patterns. And what I think is really important, Scott, is for people to understand that market goes in cycles. You look at how the market has behaved over a period of time, anything can happen on any given day. I mean, you go back to 1950, it's about a 55% chance that the market's up. And that might seem like the Wall Street casino. But
On
when
any
you
particular day, right? That's right.
yeah, well, I wouldn't want to just gamble my future on a 55% chance. But when you look over like a 3-year period, the chance of the market, being the S&P 500 in this instance, being higher over every 1-year period back to 1950, it balloons up to 90% over a 3-year period. That's a casino I would probably walk into every day. Now, obviously, nothing is ever guaranteed, and from that perspective. But the statistics and history is in your favor. So yeah, this volatility is normal, right? These market drops are normal. I mean, the Nasdaq, recently entered into correction territory, which is a 10% drop. But the great thing about 10% drops and even 20% drops are, I mean, obviously not the current account balance, but it does create opportunities, right? It creates rebalancing opportunities, looking for ways to essentially position investments in a way that is going to help you in the longer run. So when you look at your financial plan, you're still in good shape. Because remember, your financial plan, it wasn't built for a 1 month or 2 month time horizon. It's built for your own personal long-term time horizon, whether that be 3 years or 5 years or 10 years or longer. That financial plan was built, with all of this volatility in mind, and knowing that, yes, there will be periods where we see drops, but there's also periods where this creates opportunities.
Yeah, I think it's also important to really reflect, Andy. Our portfolios are constructed along with a financial advisor with a financial plan in mind. Stocks we view stocks as longer term investments, typically 5+ years. So if money is needed within a shorter period of time, there's money allocated towards stock. A very small percentage of our clients have 100% of their portfolio in equities. Those that do have very long-term time horizons or extremely high risk tolerances, or both, really. So typically it's a portfolio that's designed to kind of weather these markets. And I think if people step back and think, all right, not everything's in stocks. Stocks go through the cycles; they're going to go up. I always like to kind of think back over a period of time when the .com bust came, and most of our clients were maybe a little younger then, but still had some money in their 401k and stuff at that time. But the Dow Jones Industrial Average was roughly hit 10,000 in the year 2000, right? Then we had the .com came way down. We had 9/11, it came down further. It fell almost in half. Went back up. We had the financial recession. Markets fell more than half over that period of time. Then they recovered, went back up. We had COVID and all this other stuff that transpired. And the Dow went from 10,000 to roughly 40,000 and some change, where it's at today, right? So a 4-fold increase over those last 25 years. Doesn't mean the next 25 years are going to be exactly the same, but that's a 25-year period. If you look at it as 25-year periods, it's actually somewhat quite similar. And it's just a scary time right now. So what are some of the things that you and your team have been doing along with our advisors in this last week as the markets are going through this turmoil?
Yeah, a lot of it is obviously understanding, how markets work, and education and making sure people understand that things go in cycles, and that market timing usually doesn't work because you ended up buying high and selling low because your emotions take over and you get fear, you get greed. But outside of that, which that's probably in all honesty one of the most important things, because once you make a costly emotional decision, it can be really hard to recover from that, like you were saying just a few minutes ago. Just beyond that though, from slightly more technical area, we're looking at opportunities that are out there where we would position the stock portion or bond portion in a manner that we think might be more attractive, like for instance, focusing on different areas in large cap value. So looking at sectors that might have a little bit more of a focus on fundamentals in general, but then also working with advisors and advisors working with clients on asset classes even beyond stocks and bonds. So I mean, there's lots of other really good investment that can help you smooth out returns and that help you sleep better at night, because ultimately, the sleep test is one of the things that I think about a lot. If you're losing sleep at night, you might have the wrong investment mix, because you need to be
Well,
able to sleep on good times and bad times. Because I mean, we all want all the upside and none of the downside, right? But
yeah,
yeah,
but the reality is, Andy, as you know, it's like none of us sleep well when things are going really poorly in our lives, right? And this is part of our lives. And I think we wake up in the middle of the night and our mind tends to go down rabbit holes into dark thoughts sometimes. And same thing happens right now. And it's easy to extrapolate, saying, oh my gosh, if this went down 8% this week, what's going to happen over the next 10 weeks? I'm going to be broke soon. And I think it's actually important for people to educate themselves, right? And that just even having an understanding of how markets have worked historically, how this is a very normal correction, could go down much further from here. We don't know.
right.
Our job is not to try to outsmart the markets or predict the markets. Our job is to build portfolios to withstand the markets. But so I think having some education, I think it's also important to understand what your mix is in your portfolios. You've got those life savings, this bucket of cash, all invested on your behalf. It's not all in stocks. You're not 100% of it's not owning companies, at least for the vast majority of our clients. You've got some mix in there. And so I think to understand what you've got in that mix, what is going to be subject to these ups and downs more, it's the downs that we don't like, what's subject to those, the downdrafts, and what parts of the portfolio are more safe that you can think, instead of worrying about this portion, I'm going to have security thinking about this portion. So I think just even going through that taking a good look at that, either on your own or talk with your advisor to get like what's actually at risk here, what's safe. And then just to remember, like you mentioned a casino, and I always like, I don't really like that analogy because it focuses on gambling. And I look at when you own stocks, it's not just some market. It's a place where you can buy companies that you didn't start. You're taking ownership of companies, right? So when you own companies, you're going to participate in the long-term growth of these companies. Historically, companies, a broad basket, have grown dramatically over time, and we have under the belief that human nature's not changed a whole lot. We're going to continue to grow. We didn't even touch about AI and some of the new technology improvements and what that probably will have on productivity. I think a lot of people are actually quite bullish on the next decade or so with what's going to transpire in the markets and with companies. But it's just been a rough week. It's in a rough couple of weeks, that's for sure.
Yeah, and I'll say one of the things that really sticks out most to me when I have these conversations, because I speak with clients all the time, and I'm talking with advisors all the time about these things, and understandably, when you see this sort of volatility, it can make you nervous when you see the market fall. But if you go back to any stretch of period, so let's just go back to 1980. If you look at the average drop from in every calendar year, you see a decline from top to bottom. The average inter-year decline going back to 1980, it's like 14%. So on average, you could expect 14% drop from a high to low price. And you know what happens? 80% of the time, the market still ends up positive for the year, right?
So if you go back and look just the calendar year, it looks like, there's hardly any volatility.
Yeah, if you just look at the year-end prices, there's only been a handful that actually saw negative returns, like 2022, like we talked about. But you see the volatility; it's pretty regular. It's not fun, but it's normal.
And we're still up dramatically from where we were a year ago, and extremely dramatically from 2 years ago. It's been we've just had a phenomenal bull run as of late, and kind of a normal pullback. And it could go down much further before it goes back up to hit new highs. Very normal with the markets.
Absolutely.
And I think from an investor standpoint, the most important thing is not letting your emotions take over, because we are very emotional creatures.
Mm-hmm.
We're wired as a way to avoid risk, right? Protect ourselves from risk. And it's the natural thing to say, the way to protect myself is to run for cover, sell out, wait for things to get better. And history has proven time and time again that is a very poor strategy when it comes to investments. And so your investment portfolio is designed for times such as these. It's very normal. And for most people, now's not the time to do much of anything other than be glad they've got a good financial plan and a good financial advisor. And if you'd like to, if you got some additional questions for your advisor, some concerns, would love to talk to you. Feel free to reach out to your advisor or anyone on our team. And I know Andy and his team would be happy to have a conversation as well. So appreciate very much your trust that you placed in our firm.
Thank you.